When you talk about the uncertainty, the inability to infer structure, I can see in the aftermath of the crisis, people are very, very concerned about the United States' relationship with China. I think the U.S.-China relationship may be at the center of some of that uncertainty about what the future foretells or holds for us all.
I think that's right. I think it's certainly at the center of any monetary deal that may be struck, that needs to be struck. But there's in other words of a second Bretton Woods, but it's not on the cards yet. And I think this is where we have to work on the intellectual structure of such a deal, because the two sides are fairly far apart. They both accuse each other of manipulating currencies, and they both say the onus of adjustment should fall on the other. This is a repeat, of things that really did happen, debates in the 1930s, which led up to the first Bretton Woods and to Keynes's plan to shift the onus of adjustment from the debtor to the creditor.
Yes.
And I think his scheme was immensely imaginative. The Keynes plan, it had a new international reserve currency. It had penalties on surpluses, both surplus and debtor countries, to reduce their surpluses and debts and deficits. And it was rejected by the United States. And what there was a compromise which left the dollar as the main reserve currency. It did have fixed but adjustable rates, which eventually broke down because a national reserve currency. A single national reserve currency, it destroys credibility in the currency sooner or later. Because you have to run a deficit in order to provide the world, with liquidity, yes. And so we're back to this problem of how to deal with these, a system in which there is, I would call it symmetric non-adjustment.
Yes,
it's just blocked.
Yeah. And in the United States case, because it's the reserve currency, there's nothing that forces it to curtail its deficits.
Nothing that forces it, exactly, to curtail its deficits, to curtail its spending. You see, under the gold standard, if China had been accumulating reserves to the extent it has, that is, hoarding gold, and the United States had wanted to remain on the gold standard, then it would have had to have raised interest rates to try and get back, some of the money that was flowing out. But now it doesn't have to do that. It can do the reverse because, of course, the Chinese surpluses are partly invested in treasury. They're recycled. And that gives rise to a boom in the United States, which, from one point of view, can be regarded simply as an example of a Hayekian crisis developing over credit, leading to malinvestment, leading to collapse. But from a global point of view, is a saving investment problem. And so I don't think the opposition between Keynes and Hayek on this point is fundamental, although, of course, the protagonists of both sides say it is.
Welcome to the Crypto Teacher. And guys, you just listened to the explanation of Bretton Woods, and I just want to break it down and make it simpler, and then we're going to listen to Kristalina. Now, after World War II, we knew that we needed a new financial system. Of course, Ray Dalio speaks of this and breaks it down, but basically with the actual gold standard, countries were scared as far as people devaluing their currency to boost exports. Now, what happened is that 44 countries got together in Bretton Woods, New Hampshire in 1944. Now, of course, the U.S. dollar, we had the most gold after World War II. So we had 2/3 of the reserves. So all currencies got linked to the U.S. dollar. Now, of course, if you had an economic crisis, if you're another country, what would happen? So that's the reason why the IMF, the International Bank of Reconstruction, now called the World Bank, was created. Now, of course, neither one of those helped out in this situation. The reason why is that the United States kept running bigger deficits, as we can see. But that was the whole plan. But I'm not going to get into that. But that was the plan. So that's the reason why we were taken off the gold standard. And of course, as we know, put on backed by oil. So therefore they could do what? Print as much money as possible. But let's listen in to Kristalina.
We face what I have called a long ascent for the global economy, a climb that will be difficult, uneven, uncertain, and prone to setbacks. But it is a climb up, and we will have a chance to address some persistent problems: low productivity, slow growth, high inequalities, a looming climate crisis. We can do better than build back the pre-pandemic world. We can build forward to a world that is more resilient, sustainable, and inclusive. We must seize this new Bretton Woods moment. How? I see three imperatives. First, the right economic policies. Strong medium-term frameworks for monetary, fiscal, and financial policies, as well as reforms to boost trade, competitiveness, and productivity, can help create confidence for policy action now, while building much-needed resilience for the future. That includes keeping a careful watch on risks presented by elevated debt. The fund is providing debt relief to its poorest members, and with the World Bank, we support extension by the G20 of the debt service suspension initiative. Beyond this, where debt is unsustainable, it should be restructured without delay. We should move towards greater debt transparency and enhanced creditor coordination. And policies must be for people. My second imperative. To reap the full benefits of sound economic policy, we must invest more in people. That means protecting the vulnerable. It also means boosting human and physical capital to underpin growth and resilience. Just as the pandemic has shown that we can no longer ignore health precautions, we can no longer afford to ignore climate change. My third imperative. We focus on climate change because it is macrocritical, posing profound threats to growth and prosperity. It is also people critical and planet critical. At the fund, we are working tirelessly to support a durable recovery and a resilient future as countries adapt to structural transformations brought on by climate change, by digital acceleration, and the rise of the knowledge economy. Since the pandemic began, we have committed over $100 billion, and we still have substantial resources from our $1 trillion in lending capacity. We will continue to pay special attention to the urgent needs of emerging market and low-income countries, especially small and fragile states, helping them to pay doctors and nurses and protect the most vulnerable people and parts of their economy. The best memorial we can build to those who have lost their lives in this crisis is, in the words of Keynes, that bigger thing: building a more sustainable and equitable world. Our founders did it. It is now our turn. This is our moment.
Welcome to the Crypto Teacher. And guys, please like and subscribe if you do like what you're listening to. Please inform your friends and family and spread all over social media. It is imperative that we get back to learning finances and understand how the world really works. Because once we understand how the world really works, we understand that everything is planned out. Now, I want to thank those who purchased the books, Crypto Teacher NWO book. Also, those who donated to the Cash App, Patreon, much love. And then also those who are shopping at the store, much love. Remember, ladies, I definitely have something coming for you. And guys, we're going to get into Bitcoin and cryptos first. Now, we definitely see the volume is still flat, guys. So we did take a little move up, but there is no volume. Now, we know that the Fed cuts checks on Tuesday. We know back is over. So we know that what? We are going to start moving up. Now, of course, we always have pullbacks, guys, but we are going to start moving up until when? The last Friday of the month. So get yourselves in position. I know everybody wants to find the bottom, but get yourselves in position because we are going to move up, especially if they start talking about more stimulus. Plain and simple. The stimulus is going to be a big factor in this. So just make sure you're listening out for that too, because that now is another indicator. That's why I said you have to pay attention to the stock market and cryptos. Remember, cryptos is nothing but speculation. If they say no stimulus, stock market is going to take a hit and we're going to take a hit too. Or we'll just stay steady and we won't move. So remember, we are attached to the stock market because why? The Fed is running both. So make sure we understand that, yes, they are cutting checks on Tuesday. It's $500 billion. They have to put that money somewhere. But the stock market is at 28,000. Once we get to that moment, we normally pull back. So make sure we are focused on the indicators, XRP, and our stable coins. Now, getting into the new Bretton Woods, and we listen to Kristalina. Guys, we know that we're already moving towards a new currency. Of course, the masses don't understand that, but we know cryptocurrencies is new digital economy. The C word was the crisis that they needed to move all this new technology in. We know it's no reason that China is doing all the Bitcoin mining. This is all a setup to move the empire from the United States over to China. And basically, if you go and look at what's more important than Bretton Woods is the China Belt and Road. That Belt and Road is so important because you see all the major big countries attached to that. And I've been over, all of our banks are over in China. So we have the central banks piling in the gold. We had China over in Africa piling in the gold. So guys, we know that we're headed towards cryptocurrency, the robots, the AI, the automation, the drones. We know where this is headed. Now, guys, also getting back over into Libor, Ameribor. We also see who? The crypto dad, Chris Giancarlo, is part of the American Financial Exchange, the director, board of managers. So we know, guys, it's all tied in together. Now, basically, we also have Bitcoin mining. Future is green. Guys, I've been over this. Everybody talks about the energy that Bitcoin takes up. No, we're about to move into renewables. And those who listen to my channel, I said it from the very start. And now we're slowly seeing that, especially with the Energy Web token. Now, we have the Neo Foundation upgrades to as far as the file storage and digital identity. And guys, we know biometrics, digital identity is going to be the new thing. That's all you're going to have. You're no longer going to have these cards. Everything is going to be on your phone, and then eventually, of course, something else. Now, lastly, guys, we have Monero updates. Even though we have the IRS trying to break into it, basically they upgrade it so it can be faster. And then also the privacy is a lot better. But guys, that's all I have for you. Don't forget about the books, Cryptoteacher NWO book. Also the cryptos, Coinbase, Bitrue, Binance. And then also the stocks. Don't forget about the stock channel, guys. Do not forget about that. Stocks are very, very important. Even if you're not investing, you have to pay attention. But you have your cobalt, your chip stocks, your banking, your gaming. Also, everybody sitting at home, don't forget about the at-home stocks, the C-word, the biotech stocks. And then also, while everybody's sitting at home getting free money or waiting on that free money, what are they doing? Drinking and smoking weed. Don't forget about those stocks, and y'all have a wonderful day.